So with it, you said something in the interview with Meet Kevin the other day that I thought was interesting. Because again, if someone's brand new, what's their big concern? Losing money, right?
Correct.
I mean, because you work for your money, and if depending on the type of work you do and how much you're making, I mean, if you maybe save up $1,000, $5,000, that could take you a lot of time to save that money. So to put it at risk of losing it is a big fear that a lot of people have. But you said something interesting that I thought when you were asked about losing money, your biggest loss in the stock market. And I want to hear you say this to give that perspective to people, because it was a great, I think, shift in mentality of how to think of your biggest losses.
Yeah. In terms of my biggest losses, it's not like I lost money on a stock. Like if you're doing this for years and years, eventually you're going to pick a bad stock. You'll have to sell for a loss. Like there's just no way you're going to do this for 10, 20, 30 years and not sometimes pick bad stocks, right? But my biggest losses have been like opportunities where I didn't invest in a company and they had huge potential futures, and I just I saw it, and then I was just like, maybe got a little greedy about pricing. I'm like, well, if it drops 2%, that's where I'll buy, and then it doesn't do it. And that's my biggest, if I could ever have regrets in the stock market, is some of these stocks I've come across over time and maybe didn't invest in that one, and chose to be on the sideline and then watched it thrive over the next 5-10 years and be like, why didn't I invest a little bit in that stock again? Remind me again.
So I think a big one you gave was Amazon, was an example, because I think you did a video 3-4 years ago about Amazon. I think it was called like $800 stock versus $8 stock.
Yes, I remember that.
Yeah, something
it's a
like
classic.
that. I remember watching that probably a year or so ago, and then seeing Amazon's share price now, I mean, in the thousands of dollars for one share. And I remember like, wow, like it wasn't that long ago that stock was pretty cheap.
Yeah.
And how much it had just gone up. So, I mean, it sounds like you're more of the favor of like, okay, you're better off, I don't want to say, not say pulling, because I don't want people to think like taking unnecessary risk, but like
the risk has to be calculated, but a lot of times if it's a truly great growth company that you are 100% believe in over the next 5-10 years, a lot of times it just makes sense to buy it regardless of valuation. And Amazon's a perfect example of that company where it's just like, it was clear it's a great company. And I mean, if you like ask anybody, like, are they going to order more packages over the next year from Amazon than they did the past year? Of course. And like in the future, like that's just the way it is. Like every year I order more and more stuff on Amazon, right? It's just the way it is. And never mind Amazon Web Services. That's just a perfect example of a company. And at 800, people thought, you could definitely make a case like, whoa, it had gone up so much, it's expensive. Right. Now the stock's 3,000 plus. You know what I mean? So, expensive is relative. When it's a truly great growth company, it really doesn't matter too much about valuation. It's about that business underlying.
So at a certain point, it's like, pull the trigger.
Yeah, exactly. Pretty much. Yep. With great growth companies, that is the story. That happened to me this past year in Shopify. I just viewed Shopify and I was like, the stock looked expensive, and the stock's always looked expensive. And I'm like, I can either have regrets about how I didn't buy it under 100, or I can just put money in now. And so I just put money in now, and I'm like, let's see where this goes over the next 5-10 years. I think it's going to do pretty well. So let's just put it that way.
Cool.